Joining us for more now on the economy is one of our regular contributors, Marcus Mabry, the international business editor for the New York Times. Welcome back, Marcus. Good to see you.
Good to be here.
All right, so we just had this report about how the British government is being forced to have a fire sale of sorts to get rid of assets to try to help with its budget deficit. Is that something we might try in this country?
Well, you know, the U.S. is certainly in also a grave situation when it comes to its increasing budget and trade deficits. But I wouldn't expect the U.S. to do what the Brits are doing. Number one, we have a much larger private economy here, and a lot of the assets in the United States are held in private hands, not in state hands. And so it's much less likely it would happen here. In the 80s, you'll recall that a number of assets were sold off to the Japanese, like Rockefeller Center. Those were private assets. I'd be very surprised if the interstate highway system were sold off to private hands in the U.S. and they all became a toll booth.
Okay. Well, you never know, though. We also had two reports about how well China is doing. First of all, we have these new trade deals that are being signed between Russia and China on energy and so forth. And then we see the luxury goods market that seems to be heading east. Is this an indication that really China is doing very well, or just that the rest of us are doing really bad?
Both, unfortunately, for those of us who are not doing well. Yes, the rest of us are doing poorly, and China is doing tremendously well. Their growth rates are not at the double-digit rates they were before the global economic crisis. However, they are incredibly healthy, and probably 8% this year. And so while you've seen a contraction in global trade, for instance, last year versus this year, China is actually increasing its market share of global exports. And so China is getting stronger and will come out actually more competitive from this recession than they went into it.
Okay. And I want to talk about unemployment. This is something that seems to be perplexing in that we have the Dow now flirting with 10,000. You have a number of global markets doing much better. Yet joblessness is not only a problem, it's expected to get worse.
That's right. Joblessness will probably cross the double-digit range, get 10% or worse here in the U.S. And in several other markets in Europe, too. Joblessness is still increasing. What we see is that jobs are a lagging indicator. Companies only hire new workers when they're sure that the good times are here to last. The market is a forward indicator. The market says, what do we expect companies to profit next quarter, the quarter after that? So the market already believes we've passed the worst of it. We've already coming up and recovering from the bottom. The joblessness is a measure of the fact that things are still really bad.
And when we cross this threshold of 10,000, do you think we're going to do it? I mean, we're very close.
We're going to do it. The question is when. We wrote a story, I think, 2 weeks ago about it, the impeding 10,000. The good news is it doesn't mean anything, so we don't feel too badly about having written that story. But it's a positive psychological mark, but it doesn't really mean anything, actually.
Does it affect other markets, in other words, around the world? Do they look at that and say, oh,
it will. Yes, there'll be a global burst of enthusiasm in equities that you'll see around the world. And they'll probably hurt the dollar more.
And part of this growth or the benefit has been the fact that the dollar's weaker, right?
Oh, absolutely. Well, you know, the dollar's suffered from the fact that there are other things that are interesting to invest in now for investors. So they're pulling money out of dollars, say gold, say China and India, and sending it to those other possible investments because they're actually better returns than the dollar, where the interest rate is almost, zero at this point.
Well, regardless of where the market is, it's always good to see you, Marcus.
Good to be here.
Thank you.